Hey, Jeff. So yesterday, Tesla dropped a new Model Y, and well, market didn't seem to be as excited about it as maybe people were hoping.
During the market day, October 7th, the stock was up a couple percent, I think, on the anticipation of a more affordable version of one of the cars that was anticipated to be announced later that day. And then as soon as it was announced, the stock fell, which tells me that the level of affordability that was pitched was maybe not at the same level as the expectations. Maybe they were hoping for a slightly less expensive version. I think I saw a report that said analysts were expecting $30,000 and it came in substantially higher than that, although cheaper than the current model. So yeah, but I think the bigger question, Jason, is let's just say that we know there will be a cheaper model. Does it make a difference?
Yeah, we'll talk about that, and I'll talk about some things that I think maybe matter more for Tesla, both in the near term and over the long term. I'm Jason Hall. That's Jeff Santoro. This is Investing Unscripted. We get to make these videos because of our partnership with the Motley Fool. So if you like our content and you're looking for more great ideas, go to our special link. It's fool.com/unscripted. Go check out that link and you can get access to the Motley Fool's 10 best stocks to buy right now. All right, Jeff. Yeah. So there was a lot of excitement that Tesla was going to be rolling out something pretty big. And essentially this is what they rolled out was the Model Y Standard, which comes in now at just under $40,000. So it's cheaper, right? It's definitely coming in less. And in terms of, it's not the cheapest EV out there by far, but in terms of bang for the buck, you look at the range, performance is still pretty good. There are definitely some things that are compelling about it, but it definitely didn't meet the market's expectations.
No, like I said, I think the expectation was closer to 30,000, and that's not, that number is not that close to 30,000. I don't view that as I guess it is more affordable by comparison, but I don't think of that as an affordable model.
There's also a Model 3 that's 36,900, so another $3,000 less, but again, far short of the expectations. I want to talk about some other things, right? So first of all, a key reason why Tesla rolled this out is because we're in October now, so it's official. The tax credit for EV buyers has expired. It's off the table and it's no longer available. So there was a bit of a market reaction to that with Tesla coming out with this lower price model. But there's another thing that's happening that I think is really important. They are going to start to feel the impact of the loss of the renewable energy credits as well. These are the credits that they've been selling to other automakers to offset tax obligations. That's another thing that's going to be going away. And I think that's affecting Tesla maybe more in terms of their profitability, a little bit of a double whammy. And this is the thing that I wanted to really stress through the second quarter. Tesla's automotive revenues, of course, are down, and that's partially because they've been selling less of the more expensive cars and more of the lower cost cars. If you look at production, you look at units, it's a little more favorable. They actually started to increase production a little bit of the 3Y models, and then deliveries are still down double digits, right? That's the big one. So they've increased production on anticipation that they would sell more through September, right? Through that period. Here's what we do know. This came out on October 2nd. Production for the third quarter and deliveries both were strong. We do know that those results were better than what we had seen in the prior periods. But what we don't know, Jeff, is what are things going to look like in the fourth quarter, right? And we don't know how that's going to affect the company's bottom line. Now, sure, lots of people have said the same thing, so there's nothing really new about that. But the thing that I really want to stress for Tesla investors is that Tesla's biggest ambitions are more than just selling cars.
Yeah.
Autonomous vehicles and the services and the high margin fees attached to that, like the robotaxi business, is something they continue to try to scale up. Robotics, artificial intelligence, those are the big goals that Tesla is working on. But it comes back to the auto business because, well, selling cars is what generates the margin dollars, the cash flow that Tesla is looking to use to invest in those things. And for Tesla to do all the things that they want to do, Jeff, they need to sell more cars.
Yeah. They're facing their most challenging period of time right now, I think, as a car company, right? There's a lot more competition domestically, even, and definitely even counting all of the BYD cars that are in China and other parts of the world that we haven't yet seen here in the States just because we don't allow them, at a time when they're facing this competition, they're putting all of their focus on these other ambitions that you just talked about, which is fine, except that you need to defend your position a little bit too. And I feel like this lower cost version was meant to do something I don't think it's going to do, which is either spark interest, spark more deliveries. I don't think it'll do that. We'll see. Like the jury's out on that. But like you said, if they can't fend off this competition they're seeing on the car side of the business, we may never get to see the autonomous driving, the robo taxis, and all those other things in the future.
There's a wild card here. There is an individual that has about 1 trillion reasons to really fix this issue and to help Tesla find the way forward. And that's Elon Musk with his new compensation plan that at recent values, if they hit all of the goals, would be worth about $1 trillion in equity to him, which is incredible and mind-boggling to think about. Tesla would be worth like $8 or $10 trillion if they hit all of those goals. But just to distill it down to like one number, Tesla needs to be able to consistently sell 2 million cars a year to be able to hit those goals over the next decade. So Tesla has a lot of work to do that. I'll never count Elon Musk out. But I think the key, and you and I can probably agree, Jeff, is that it's going to be hard to pull off all of the things that Tesla wants to do. And if they do just pull off even most of those things, the company's probably going to do incredibly well, and investors are probably going to be really happy with the result for themselves. But it's going to be a pretty tough act to do all of it.
Yeah, agreed. And I think anyone who's investing in this company, a shareholder, a potential shareholder, needs to be aware of that and know it, because all what you hear in the headlines is the hopes and dreams. And we're trying to talk about the reality that will allow those hopes and dreams to actually come to fruition.